Let's cross now to Ken Gichinga in Nairobi. He's Chief Economist at Mentoria Economics. Welcome back to the programme, Ken. Now, Moody says the risk of default has eased for Kenya. In simple terms, what has Kenya done right to earn this upgrade?
Many thanks for having me. According to that Moody's report, it looked at the foreign exchange reserves, which have gone up to $12 billion, a record high, and that appears to give investors some bit of confidence. The exchange rate has also been stable, and that is also one of the leading indicators they're looking at.
Right, and despite the upgrade, the rating is still deep in junk territory. What are investors still worried about when they look at Kenya?
Obviously, the debt levels are still very high. If you look at the first half of this fiscal year, about 80% of tax revenue is going towards servicing debt. That leaves very little for education, for health, for infrastructure, and investors worry how this will affect the real economy.
Right, and the government is also exploring things like debt for food swaps. Are these creative solutions meaningful or just small relief measures to ease its hefty debt burden?
Those are more of tactical moves. They don't really address the big problem of rising fiscal deficit. About 1 trillion shillings in deficit this year, which crowds out the private sector. So those are more of short-term strategic tactical moves, to be able to have some fiscal headroom. But the big elephant in the room is at what point can we start having more fiscal consolidation?
Right, and what else can Kenya do to attract more investment?
Well, I think it's really investing in the real economy, especially in the labor intensive sectors such as agriculture and tourism. These are sectors that can create a lot of jobs. And once people have jobs, you can always have your income tax, and that can boost your revenue. So it's more of supporting small businesses, having lower cost of credit, having businesses employ more people. And once people are employed, they will pay their taxes, and that will reduce the fiscal pressures.
Right, we'll leave it there for now. Ken Gichinga in Nairobi, thank you very much for your analysis.